Ladies and gentlemen, welcome back to the channel and welcome back to another sunny, beautiful day with AMC. The chart is red, but our optimism and the data is looking very, very positive, and hopefully you guys are having a great day. Nonetheless, let's talk about AMC stock for right now. AMC is down about 3% at the time of recording this video. Are we still bullish? That's the big question that everyone wants to know, and absolutely, guys, nothing has really changed on a technical basis. We're still looking better today than we have since we broke above the 50-day moving average. We're pretty solidly still above the 50-day moving average. We're not, flirting with those levels here today. You're solidly above that. The 50-day MA is at $6.87 per share. You were sitting at $7.29 per share at the time of recording this video. So you're pretty firmly above that. And like I've said many times, I want to be bullish above the 50-day moving average. I want to be bearish under the 50-day moving average. And that's not if we close like right at the 50-day moving average, but if we close, 10, 20, 30, 40 cents under the 50-day moving average, that's where I would have to get a little bit more bearish on my stance, because that typically is not a good thing. Now, if you guys have not seen the last video that was posted on the channel, make sure you guys go ahead and watch that video, and when you are at it, hit the like button and subscribe to the channel if you like that information, because historically speaking, we broke down the actual percentages and the numbers. But long story short, I'll give you a quick synopsis. When AMC breaks above this purple line, the 50-day MA, in the past, it's happened twice in 2022. Every time that has happened, you rallied 100%, and then you rallied 112%. This rally took about a week, to give you that 100% rally. From the break of the 50-day to the peak, it was about a week. Right here was almost a month exactly to the day. So when you extrapolate that out, maybe you're looking at about 2 weeks, give or take, to see that 100% rally, in which I forecasted in the last video. And from my perspective here, you've been above the 50-day moving average for well over a week now. So if the historical data with AMC in 2022 has been this pattern of, rallying 100%, well, you should be getting some of those big moves pretty shortly. And as long as you stay above the 50-day moving average, I personally think it's coming. And I think there's no way around that. I think a lot of it is going to be done by trading algorithms. So that's where a little bit of the challenge comes in, because it's not really a news kind of move, right? You're not getting any new information as of right now. Black Panther Wakanda, very good numbers. We know Avatar is going to be very good numbers. We just had earnings from AMC. We're not expecting anything too crazy, unless maybe Disney wants to make a stake in AMC. Who knows? We'll see about that. Those are only rumors as of right now. But from my perspective here, above the 50-day, bullish, in for a 100% rally if the pattern does remain true. If you're under the 50-day, if you break under that, well, what tends to happen after you break above the under the 50-day moving average in 2022? Well, look right here. You dropped a whole lot, and then you went under the 50-day moving average, and you dropped a whole lot. Now you're back above it. So I think that is very, very positive. Now, let's go ahead and take a look at something I think which is interesting. And the whole situation is quite ironic at this point. And yes, we are talking about crypto. And stay tuned, guys. We're going to take a look at the ortex data. Cost to borrow rates are going higher yet again today, which is usually a good sign rather than not for an upcoming rally. But nonetheless, crypto firm BlockFi files for bankruptcy as FTX fallout spreads. Crypto firm BlockFi filed for Chapter 11 bankruptcy protection in the wake of FTX's bankruptcy. It's the latest in a series of crypto bankruptcies following FTX, Voyager, and Celsius. So now you got BlockFi, FTX, Voyager, and Celsius going under. Crypto.com and Gemini, they're probably right around the corner. The last man on the hill, king of the hill, you guys remember playing that game as a kid? Well, that's probably Coinbase up there. They're probably the last motherfucker on the hill that might just survive this storm. In my opinion, that's probably how it's going to happen. But it's very interesting how this situation is evolving, because every single one of these firms that are going bankrupt, you're hearing, hey, we got 30 million lent out to this guy, $1 billion lent out to this guy, 500 million out to this guy. And that's exactly what is helping to fuel BlockFi's demise is they essentially have an outstanding $275 million loan to FTX US, the American arm of Sam Bankman-Fried's now bankrupt empire. And it does say BlockFi's bankruptcy filing shows that the company's largest disclosed client has a balance of nearly $28 million. And after all this time, if you had $28 million in BlockFi, you're obviously a billionaire, or you just shouldn't have $28 million to begin with, because that's the last thing I would have done, is kept millions of dollars in something that is not FDIC insured. Why do you think rich people either bank with large banks and have individual insurance, or regular accounts are insured $250,000 for cash, $250,000 for stocks? It's for this exact same thing. So not good. And the whole irony of this situation is that in July, FTX swooped in to help BlockFi stave off bankruptcy by extending a $400 million revolving credit facility and offering to potentially buy the beledgered lender. And oh my gosh, we can make so many videos about this, but long story short, there's a lot of contagion risk here. And, to put it into perspective, there was $4.8 billion of market cap over at BlockFi. That was the highest value, or the last value of BlockFi that we had gotten, and now it's a zero. FTX went from $32 billion valuation to bankruptcy as liquidity dried up in a matter of days. Not weeks, not months, not years, days. And when you are worth $32 billion, essentially, there's a lot of money that is owed to people out there, and depending on where it is owed and how that could tie into, seeing some margin calls potentially for the stock market, typically margin calls are a negative thing unless you're dealing with short positions that could be seen as a positive thing, but it all depends. There's a lot of variables here, so I don't want to get ahead of myself. Nonetheless, when there is a huge contagion like this, once one domino falls, then as you guys can see, you're starting to see all of the dominoes starting to fall as well. And it will take a little bit of time, but I think, 6 months from now, things are not going to be looking so good for the venture capital funds or the hedge funds overall. Nonetheless, guys, let's get into some of the important information. And we did have Fed Bullard today, and Fed Bullard was interesting because he helped cause a lot of this bearishness in the markets. And as you guys can see from the S&P 500, look at what is happening here today. This was Bullard's first comment. Fed needs to get to 5 to 7% terminal Fed funds rate and hold those rates through 2023 into 2024. Now, markets were expecting the Fed to raise to 5 to 5.25% and to hold those rates for a little bit, but to start cutting rates by the end of 2023. That is not happening. At least that is what Fed Bullard expects, to be the path of monetary policy going ahead. And that is exactly what the markets have not expected, because the longer you stay at a 5% federal funds rate or higher in a regime where interest rates have been so low over the past 15 years, and people just, to be quite honest with you guys, are not used to higher interest rates, it's definitely going to shake things up. At the very minimum, a small recession. At the very maximum, could mean a lot of bankruptcies and a large recession, right? And a lot of that difference between a small and a large recession is going to obviously come from how long the federal funds rate has to stay in severely restrictive territory. Fed Bullard also said he expects below trend growth for 2023. That means just not a lot of growth, but he said he expects the U.S. economy to avoid a recession, at the very least, to not have a bad one. And obviously, if he's expecting the federal funds rate to stay throughout all of 2023 in between 5 and 7%, well, if you see a recession, or if you forecast that, you usually see deflation during recessions. At least all the recessions we've ever been through. Prices fall, right? As I'm sure a lot of you guys are aware of, prices will fall. That means gas falls. That means everything will fall. It's deflation, and that would obviously reduce inflation. You would be in a deflationary environment, which is worse than an inflationary environment. It can get a little confusing there because deflation doesn't happen all the time. Nonetheless, if you guys want a video on deflation and what could be coming with that, I will make that for you guys. But why is what Fed Bullard and what he said today so important. Well, you have Fed Jerome Powell that speaks on Wednesday. He speaks at 1:30 p.m. So, you know, it's not going to be early in the morning. It's going to be later in the trading day. Excuse me, which is a positive thing if you guys want to make trades or, you know, just watch it. You will all have a chance to do so unless you're Mr. Sleepy over there sleeping all day. Nonetheless, you also have economic data that will be coming out, a lot of it this week. And mix all of this together, if the markets get something they are not expecting, it's going to be a very negative thing. I don't think the risk is that we're going to get more positive language, more Fed pause language out of Fed Jerome Powell. I think it's skewed to, you know, more tightening, higher rates for longer, and the terminal rate will be the most important thing the markets are paying attention to when Fed Jerome Powell does speak on Wednesday, because the markets want to know, is it 5%? Or is it 7% that the Fed has to take rates and keep them there? Because the higher it is, the longer it has to stay there, means, you know, more downside for the markets, essentially, and a higher chance of a recession. Now, let's skip all of that. Let's get back to AMC and let's take a look at the ortex data, guys. So you do have about 80,000 shares that are available to be lent out as of right now. As it looks, about 40% cost to borrow. So those numbers have not moved around all too much, but you are seeing the cost to borrow minimum shooting up to about 34.43%, cost to borrow max at about 70.15%, and cost to borrow average of 55.27%. I want you guys to keep in mind though, this chart over here on this side is only from Interactive Brokers, and these are their numbers. So they could have a lower cost to borrow rate than their other competitors, and it wouldn't surprise me since Ortex is using the data. So take it with a grain of salt. I think this is much more accurate of what the actual numbers are, probably across the board, 55%. I think if you were to look at all these other investment platforms, that's more likely what the number would look like. And you are seeing a live short interest of free float that is spiking up yet again today in a big way, up almost 6% alone today, now at 21.22%. If we look at the last settlement date that we just got, that was on November 15th at 21.64%. So we are almost seeing the highest short interest that we have seen for all of 2022 still. So if that is really the case, guys, and there's the number right there, well, shorts have not even covered at all, like none of them. And if that's the case, I mean, AMC could have a lot more upside from here. Maybe it's more than 100%, because after all, AMC has rallied about 54% from the lows of 2022 so far alone. I know it might not feel like it because we're all likely down a lot on our position still, but you've rallied 54%. If no shorts have covered, if shorts have added to their positions, and you're still looking this bullish, I think the MOAS could be imminent. It could be imminent. Sorry guys, I got a little cold, so it sounds weird when I'm saying that. Imminent, you know, at the next big news catalyst or the next big reason to buy AMC. Maybe it is the final Black Panther numbers. Maybe it is some kind of interest in AMC from Disney or Amazon or whatever else the catalyst is. I think that could be the thing that tips AMC over the edge, that gets a lot of shorts to actually cover, because after all, we've talked about it many times. Does AMC look more or less bullish over the next 3 to 6 months than it did over the previous 3 to 6 months? And the overwhelming answer is more bullish. Got more films going to theaters. Like, that's the number one thing. You got more films going to theaters. There's going to be better numbers at AMC over the next year than what we have seen in the past year, guys. So that is a big reason why I think shorts will cover on their short positions, because, you know, fundamentally speaking, things are going to get better from here, not worse, guys. So there is that. Like I said, on a technical basis, watch that 50-day moving average like a hawk, especially if you are trading options. Now, as far as volume so far on the day, you're looking at about 11 million shares that have traded hands, which is not a huge shocker. It's, you know, the first day back after the Thanksgiving holiday, the first full day back, I should say, since the Thanksgiving holiday. A lot of people are still not in the office. They're still not trading stocks, even though it's a little bit more normal. You're still seeing lower volume, and that does have a role to play in seeing AMC rally. It tends to rally off of higher volume, and you're not getting that today, so it's not a surprise the stock is down about 3% at the time of recording this video. Last look is going to be at the option activity. I don't want to leave that out here in this video. You can see the positive order value is sitting at 62%, and a lot of dollars are heading into AMC options here today. 8 orders, so they are larger orders, totaling $11.73 million. $11.73 million all last week. You've seen 55 orders totaling $13.28 million. You're already seeing almost the whole last week's worth of option activity today alone in the first couple hours of trading. It's getting pretty interesting, and the positive order value is better than what it was for last week as well, guys. So take it as you guys please. Source your comments, questions, or concerns down below in the comment section. Hit that like button and subscribe to the channel as well if you have not already. Thank you for watching, and I will see you in the next one.